So in today's video, I'll be going over how I use the ICT CBDR, the central bank dealing range, as it's also known. So firstly, I'll start off with explaining how I incorporate time and price into using that, because otherwise it's just a bunch of standard deviation levels. So first, I'll go over what the CBDR is. So it's the range between 2 p.m. and 8 p.m. Eastern Standard New York time. And what that gives you, mainly on days that it's not so pronounced, so some days the CBDR is extreme. Like if you look at Friday, now of course you probably wouldn't use Friday to Sundays for CBDR, but if you're looking at Friday, like that price action was insane. So if that was like a Thursday, the CBDR would be cooked. But regardless, you can still use it. Even if it's an extremely large range, you can still use the inside levels because price may work inside the CBDR instead of above or below it. So now I'll go ahead and turn on this so we can kind of start to go over how I use time and price. So the reason I have these sessions on, right, is to kind of highlight the AMD throughout the day. And if you mix that with compression and expansion, you can kind of get a good idea, right? Because AMD is not always straightforward, where it's just consolidation, manipulation, expansion. But like for the example right here, now you can see where I have these levels lined up. What I use the CBDR for mainly is for daily high, daily low projections. That's usually what I use it for. So us moving forward, we can see right here, if I start to outline some of these levels, you can see how the high of the CBDR was used in London to make the low of the day, relative to 12 a.m., of course. Because if you think about 6 a.m., yeah, we did open lower 6 a.m., then run up. But we understand if the financial day starts at 12 a.m., then where's 12 a.m.? 12 a.m. being right here. So we open, we get this little consolidation, manipulation. Now we start to see distribution from there. So this is how I mainly grab those 4 a.m., 3 a.m. entries and then just hold it all the way through New York, because I understand AMD. So I say, okay, if I have premise, bias, and narrative, and I say, for just this example, we come down, we stop here, and we start to reverse, right? Now, I've said in other presentations how it's usually not likely for us to just make the single low and then just keep going, right? But if we look back, we have this low right here. This low comes out, take that out, right? So that doesn't mean this is on its own. It's constituted by this low right here. So I say, okay, we made this low. We used the high of the CBDR. I'm expecting now that to be the low of the day. And if with that conviction, now I'd be looking at these levels, 127, 162. And then what I do from 162 is it's just throwing in the optimal trade entry levels, a 3/4 retracement, Now, what are we retracing? We're not retracing, but it's an algorithmic reference level. The same way I've explained shallow and deep engagement levels. This is just the same premise behind that. So when we start lining some of these up, we have 705, we have 62, and then usually I have 79 on here, but I don't have it on my preset right now. But anyways, now we see, look at this, right? Now, using the CBDR, we can see how we frame the low of the day and then frame the high in the New York session. Now, the CBDR runs until 2 p.m. Why 2 p.m. exactly? Because that's when the next CBDR begins, is at 2 p.m. It's from 2 p.m. to 8 p.m. So, and you might ask, well, why does the box start at 235? That's just the high to the low between 2 and 8. Now, of course, if you stretch this box out, that is the CBDR. So I always look for it to run up until 2 p.m. and you can kind of see it runs through it once we open up at 2 p.m. We start dropping, run through it. And then that starts to create the next range for the next day. So I'll move forward. And then I look at the exact same thing. So where do we have our CBDR? It's more pronounced in comparison to this range. So this is what I mean. Like you saw the other day, we ran all the way to 162, or I mean, what was it? 162 level. Now today we are making the high around 127. Now what I'm looking for, right? And I'll throw 1.13 right there. So what I'm looking for now that we have this compression, what I look for in London to set up my expectations for which will be probed, right? Which levels on these CBDRs will be probed. Now, when we're not in all-time high scenarios, you can use previous data to say, okay, there's a swing high here, there's a swing high here, there's a fair value gap in this level. So it's like things like that of that nature. Now, what you can do when we have a more compressed, you can start throwing on like quadrant levels. And this will give you a good reference point of where we should find sensitivity generally. So we find sensitivity around the 0.5 level inside of London, around the end of London. Now, what do we see happen from Asia heading into London, right? Now, I was talking about the London model that I use and how I incorporate time and price. So once 1 a.m. opens, that's when the London session begins. I'll look for that 3:30 sweet spot. Now, all 3:30 we just compressed, right? And then we drop down to make a manipulation in the London session around 4:30, 4:35. It does not reach one of our key levels. It does reach the low. It reaches the low, but it doesn't come down to the low like it did back there. And that's what mainly I look for CBDR levels to do is pinpoint by a few ticks. So now I will put that for completeness sake. I'll add this level just to say, okay, well, we did use the low. Now if we're going to use the low, sweep through it. What PD arrays do we have? Now this is with the premise and bias that we're going to be going long. This is where you imply narrative. Where would we be having a PD array for price to come and resist off of? We have this rejection block right here. I always do that. I always click the wrong one. And we have this wick, but mainly focusing on this because this wick is so close that, yeah. So we see it almost comes down to the 7.5 level. Now, of course, if you want to be complete, you can also measure this wick, and it hits the 2.5 level. So those are good confluences for you to be measuring. And then you could say, okay, I think that'll be, I think that'll be the long. Sorry, just kind of cooked the presentation right there. So anyways, back to what I was saying. So we could say, I think we're going to be going long. Now, when we have compression in London and in Asia like this, right? And what I mean by compression is usually once we see after 12 a.m. and we open up at 1 a.m. above Asia, we want to find a pronounced fair value gap or PD array in general to support Asia to keep going. Kind of how we have right here, right? We have this consolidation and we open in New York and we kind of find sensitivity around the high right here. In this fair value gap, this displacement, regardless, however you want to look at it, this was the fair value gap, this was the high level, and we have all this compression. So it used it to go higher, right? And that's great. I mean, that's the London session displayed in New York. And this is what I mean by when we have compression in Asia, compression in London, London doesn't give you that protraction. Now, that doesn't mean you're not going to have a move in London. Look at this. I mean, this is a good size move right here. But if you're following the criteria for a London protraction, then that's not necessarily what you're going to get out of this. Now you could, like I said, still traded this and still seen, okay, well, if we're going to make a low in London and then likely see New York expand because we compress so heavy in Asia, where will we do that at? So we broke down. We have this CBDR low mixed with this fair value gap. And that gives you this level. Now, if you were expecting it to come to the 1-3, you could have easily measured this wick from the previous New York session. And then that's how you start to align, your PD arrays, which is price. You start to align that with time inside, and time being the session, that is. And we also have the kill zones from, I think he calls it 2 a.m. to 5 a.m. So this is technically still inside the kill zone. And we see New York. Where do we expand to New York? I'm going to put these two lines on. Now I don't have a level in between this. And there is something you could do, but I'm not going to be displaying that. I might as well display it. So something else that I'll do, and I learned this from the PD array matrix that Mike taught. He'll have his quadrant levels, his 0.25, and he'll take and measure the range between the 0.25 and the 0.5, right? And he'll say, okay, that's discount, and then above that is going to be premium. So if we do in this case and be like, okay, well, this range right here is discount, this is premium. This is where I derived this idea from doing this, measuring between two levels. And then you see right here, it hits the 0.25 level pretty cleanly. And if I throw on shallow engagement, I'm curious as if it reaches an algorithmic level. So we get extremely close to the 382. And I mean, it's not even perfectly on it, but you get the idea. I'm not looking for per tick, because the more moving parts you have, the more complicated and harder trading becomes. So I'm okay if I put my stop loss here, put my entry here, and look at the bodies. Bodies respect that beautifully. So then what, we start to drop off. Now, I'm not going to explain how you go through a daily and weekly profile to derive direction and your bias, but I just showed you how, for example, if we have the bias to go long and we're expecting a low to be made around one of these three levels based off the prior price action, prior reference levels, things like that, this is how you can line that up. Now going forward to the next example, I'll take off some of these. And notice how I'm going day by day. I'm going forward, every day. I just did Mondays, I did Fridays. So it's like, brother or sister, this shit is green. And Aiden trades a vouch for this too. He uses this more than I do, honestly. So this is a good example of having a pronounced CBDR. So what I'll do here is put on some of these reference levels. So boom, we got it like that right there. And then again, you can measure put a fib on any of these. And get highly precise levels. Again, bro, 0.75, put it at 0.5, it's not even 10 handles right there. It's not even 46. So those are pretty good stops, But anyways, we're coming into Asia. We see a strong drop off. We have this wick that's pronounced. There's not many PD arrays inside of this. So, you can measure that wick on top of measuring this, on top of measuring the CBDR levels, and you get a pretty precise entry. And then we come back into it in London. London sweeps the low of Asia. by just a tick. And then we reverse, keep going higher. Now, this New York session was a little weird. It was harder for me as well. But it's not impossible, guys. Do something like this right here. And it's like, you see how much I'm going into this with detail. Like, you could just only trade using the CBDR. But a lot of people won't do that. And then a lot of people will only try to pull certain parts from this. And not saying anyone watching will, but just in general, a lot of traders will only pull certain parts from concepts and topics they learn, and that hinders them because they're not studying the true nature of it all. Like, look at how precise just the CBDR can be, mixed with Asia, London, New York sessions. Like, these boxes are only denoting time. That's it, and the opening and closing prices. So it's like, it's crazy how precise this can be. And then we see it drop down right here, and then we see it expand. Where do we expand to? Got 1. Now, this is where I'd be like, okay, why do we use 2 over 1 or 3 over 2? Look at where this high is, right? So we got -2 right there. I want to see if we can get like -2.13. Let's see where that's at. Just above the high. So that's what I would look for, right? Now look at this. So like I said, if we're going to 2 p.m., I'd normally look just for the New York high, but this is how you could grab those really high tick ranges. I mean, we hit this right before we hit 2 p.m., 150. We start the handoff for the CBDR to begin again. Now, this is what you do. Now, to get a projection level for the high of the day or low of the day, and you don't know, and you have direction, but you maybe don't know how far it might extend. Naturally put on your 2.7 and 6.2 levels. And look for PD arrays that align near those. Alright, so my bellwether chart is the 5 minute, meaning I find most of my setups, most of my good PD arrays on the 5 minute chart. Now you see right here, it's a little harder to see. There's not a PD array that just jumps out at you, right? So what I'll do is I'll go up a time frame first. And then if I don't see anything, then I'll go down a time frame. So what do we see here? We see this fair value gap. Why am I picking it over this one? Because this one is above the level and right on it, rather than slightly below. So I'll extend this out. So we have that, right? But what about this one? Where should we look for it to pull to first? Because obviously it has to get here first before we go any further. So do we have a really good PD array that's like really pronounced right around this area? We have this fair value gap, but to me, I don't really like that. We have this fair value gap, but that's way above this. Now we do have this order block, this bullish order block, that we could be using as a previous reference point, but just for the sake of the video, I'm gonna go down a time frame. Oh shit. Apologies, technical difficulties. Okay, so we're gonna go down, and now we're looking around this area. So we have this fair value gap on the 3 minute. I like that. And we even see it gets used right there. So look at how precise these levels are now. Just for this sake, I'm gonna. Alright, cool. So now we'll go back to the 5 minute chart. And now that we have our levels derived around the CBDR levels, let's see how they deliver. So we see the 162 level gets, perfectly hit. I mean, look at that. Now, if you had your limit on the fair value gap, you might have missed out. Yeah, it looks like you missed out. But, I mean, it still doesn't even retrace enough to hurt you. Like, it retraces into this fair value gap right here. Small one. And it just keeps going higher. until we hit the level for the negative 213 standard deviation. So moving into, I believe, one of the last examples. This is a better depiction of how the CBDR mixes inside the Asia session. Because the Asia, for me, starts at 7 a.m. Well, that's when I start tracking it from 7 p.m. to 12 p.m. 12 a.m. So, again, compared to the day so far, we have a pretty large range. So I'll put on the quadrant levels again. And this is like the same way I would do it moving forward, right? So usually I focus on New York session only because of the risk of how we can see in the last couple examples how London can be pretty tight and not natural in its protraction. Even though it may take out the high or the low, the model I explained to you is butter. And when that displays, you just, oh man, you can eat all the way up until 7 a.m. From like 3:30 to 7 a.m. You might get 200-300 ticks, 400 ticks. And that's pretty good, man. So, we do have another example after this. So looking forward, we have the 0.5 level, the 0.75 level. And you see price almost perfectly uses the 0.75 level in the London low. Now, like I said previously, when we don't see a protraction in London, I expect it in New York. So I'll look for the low here or a PD array from the low to the swing high that was created. So on the 5 minute, we got this fair value gap right here, volume imbalance included. So I'll mark that out. And then I also will want to look for the open and the close. Those are also important. Now Mike talks about open, high, low, and closes a lot. So this is something you could say I snuck in there. So look at this, right? So where do we have the open? Right below the close of London. And then we purge all the way up to the open of the London session. And then we start to break down. Now, if you don't subscribe to the way I just explained this, you could still use this fair value gap right here. Now, you might say, oh, we traded through it. We only traded back to the open of the New York session. So, and on top of that, the bodies respect the fair value gap in general, so you could still use that to push price lower. Obviously, you see that here. Now, moving back to our standard deviation levels, what do we have? We have 162. And first, let's look back, all right? Now, we see it's pulled close to 162 or 1.5 level. Now, let's look and see if we have any fair value gaps close by. So, we have this one. And it gets really easy for it to jump out at you because you're only looking at a short range. So, it's not like you're looking at all of this and saying, ooh, maybe this one. Maybe this one. Now, I'm looking at from here all the way up to here. This is a good one if you want to use that. And I'll throw it on just so, for completeness sake, we can see what it did. But you can see this one is already inside of that. So, and then we have 127. We have this low right here. Then we have this. I'd likely use the balanced price range right in between it. Boom, just like that. All right, so now we scroll back forward. We see we took out the low, broke through that, used the bigger and the smaller. Mainly used the smaller one that I had outlined, but you could see how the bigger one was used as well. And then this balanced price range wasn't really prevalent, but we see right here how price used the low that was swept to push lower for that final expansion before we entered into a compression. going into lunchtime. And then 1:30 is exactly when ICT says the PM session starts opening up back for us to be able to trade it and, see results. And then boom, what do we see? That exactly. Now we move into this last example, and this was Friday's example, so I'm sure most of you who were trading that Friday understood how that went. And you'll be able to see why I have what to do in a situation like this when you're still using CBDR. So I'm going to extend these levels to the right because this is the last example. And we see here, I'll put a box on just so you all can see still. So this CBDR is pretty fucking cooked too. Oh yeah, I forgot. You gotta go to the open. Yeah. Okay, so that's the CBDR for Friday. Again, probably throw on the quadrant levels if you're trading London session or Asia. I don't recommend Asia session. Now, there was a time when Trump first got inaugurated, the Asia session was beautiful, but I haven't personally seen it in too long. I mean, we still see like 300 or 400 tick ranges, but it's not as pronounced as it used to be. So moving forward, we see Asia immediately hits the negative 1.3 level of the CBDR, and we've dropped back down to 0.25. We rally back up near that, creating relative equal highs, and then we drop for 0.5. Again, you can look for PD arrays that are inside this range or around this level, likely inside the range, to help you a lot more than just like last New York. And we see a lot of compression. I'm not gonna lie, today was not as clean. I mean, there's a lot of things you still could have used. I did a review on New York, so I won't be doing another review in this video. But yeah, it was still tradable. I won't say it wasn't tradable. It was just, it didn't give you any opportunity to get in until way the fuck down here. And you can see how the CBDR levels were used, kind of like a ping pong board. Bounced off of it, pushed off of it, bounced off, push off, bounce off, push off. So it just keeps playing around. And going to the 1 minute, you can see how cleanly CBDR was used. Get that, where it closed at. And get that swing low. Look at the way it used this with the bodies. Look at the way it used this with the wicks. My favorite signatures are when it uses it with the wicks over the bodies. But of course, if I'm saying, okay, we're going to use 3, where are you going to measure? You got this right here. Why just this? Because it's an order block. So I'm going to use the wick first. We're going to find extreme sensitivity, and we'll likely see that fall off. And we see the low gets used pretty perfectly. And then obviously you can see the way the body's respected, but that pretty much sums up how I use ICT CBDR on my day-to-day trading. That was a weekly review for the entire week of whatever week this is, ending on the 10th of October. I appreciate anyone who stayed to the end, and I'll catch you all in the next video.